What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get 2 free stocks, make sure you check out my link below. Hey, I'm Sain, and if you're new here, I make videos on personal finance and how to invest and build wealth through the stock market. I started this Robinhood challenge for 2 reasons. Number 1, I wanted to simplify investing for those that wanted to invest but didn't quite know how. And number 2, I wanted to show you guys in real time the companies that I invest in to grow my portfolio from $0 to 10K and then eventually from 10K to 100K. So feel free to join me on the journey by grabbing some free stock using my link below, or sit back and watch. Either way, I appreciate you. Today's video is about an update on JMIA stock and whether or not it's to buy at its current price, as well as what is the stock split. But before we do that, let's take a look at my portfolio and open up a free stock on the day. Okay guys, as you can see, my portfolio is currently sitting at $37,600. The market is open right now, so it's be moving up and down, so it's gonna be too hard to get the number right on the spot. But check it out on the week, guys, we are up 2.4%. On the month, we are up over 5.5%, almost 6%. If we go 3 months out, we are up over 15%. And if we go 1 year out, guys, even though I haven't had this account 1 year, we are up 12%. And if we go out all the time again, we are up almost 12.5%. Listen, guys, I started this account in January with $0. Each and every day I come on here to show you guys how to properly build out an investment portfolio. So listen, without further ado, we're going to open up a free stock today. This one comes from Josh. Josh, I want to say thanks in advance, man, for using the free link below. You guys already know it's a win-win for both. You get a free stock and I get a free stock. Let's go and see what we got today. We got Intero Midstream, and this is a stock I already own, and it's a huge dividend play for me. So I'm extremely happy with one share, $5.69. Again, guys, continue to use the free link below. It's free money. Ain't nothing better than free money. So listen, guys, we're going to talk about Jumia Technologies on today. Ticker symbol JMIA is currently sitting at $13.64 at the time of this recording. Again, the market is open. And so listen, man, I wanted to tell you about this stock because it's been going crazy. And so one thing about a stock that has been going crazy, they are caught too far too fast. So I want you guys to be very cautious because this stock is known as the Amazon of Africa. One thing you need to know, just like about NIO and Tesla, when Amazon move, this stock moves. Okay, so those of you want to know when to get in this stock, how to get out of this stock, you guys got to be paying attention to Amazon because this stock is attached to the hip of Amazon. Okay, similarly to NIO, when Tesla moves, NIO moves. When Tesla has a bad day, NIO has a bad day. That's something as new investors I need you guys to start having a 50,000 foot view of the bigger picture. Okay, so check this out. They have an earnings day on August 12th. So whether they're going to pop or not is going to be contingent upon the lead up to that day, if they have an actual good earnings report, and then those following days. And so if you do want to get into this play, it is best that, again, today, next week sometime, you guys start your position, but be on the lookout for the August 12th date because that's earnings day. And just like yesterday, Apple went crazy, Microsoft went crazy, Facebook went crazy. You guys need the significance of the earnings report day. And that's why I say it's important for you guys to know the calendar for the stocks that you are invested in so that you know significant days in the market that your stock will either rise or fall. So for Jumia Technologies, ticker symbol JMIA, that day is August 12th for you guys. If you want to know the price point that I recommend getting in this at, because it has already ran up too far, I would say anything below $12.50, guys, would be the price point. So you guys will have to be looking at a potential short-term dip, not nothing crazy, but if you can get it at $12.50 or below, you guys need to establish your position right there. Listen real quick, the 52-week high on this one is $17.88 and the 52-week low on this one is $2.15. I want to show you something really quickly. It's already up 8% on the day. Look at the week, it's up 40%, 39%. Look at the month, it's up 163%. And if we go 3 months out, I'm not going to even show you year and all that kind of stuff. It's already up 230%. So you guys got to be mindful that a major dip is on the horizon potentially. Okay, when things go up like this is called too far too fast. You've seen it. You guys been in the market long enough now to see it happen with other stocks. Kodak is going to be one that will be an example of this very shortly. So just be mindful, guys. Just be safe. I don't want you guys getting into these plays and then you have the fear of missing out. So you buy too high and then it don't do nothing and then you stuck holding the bag. Next, I want to talk to you guys about a stock split. Guys, reverse stock splits are not good. So if you hold a stock and you hear any news come out talking about a reverse stock split, that is not a good thing. However, in the case of Apple yesterday or in general, I got to make sure we're up on our game. When you hear a stock split, that is a very good thing. That means that that company is killing it. That means that that company is going to continue to crush it. A stock split means that the stock price is high. They want to split the stock up so it can make it a more affordable and more attractive to more investors. Okay, so in the case of Apple, you guys already know Apple is one of my staples. Apple is going to do a 4-to-1 stock split. What does that mean? So if you have 10 shares of Apple, because it's a 4-to-1 stock split, you'll now have 40 shares of Apple, but at $100 instead of 10 shares at $400. Do that make sense? And so anytime you guys hear that moving forward, know that a stock split is good, a reverse stock split is bad. So what should you do? Don't sell right now. If you have Apple or any other stock that's going to do a stock split, you need to know, your little radar need to go off that, you know what, this means my stock is killing it. This means it's only going to continue to go up from here. So why wouldn't I want 40 shares of something that's going to only go higher and higher? Why would I sell? So it's important to know, don't get an itchy finger, don't get a trigger finger, man. Stay where you're at, hold for right now, okay? Don't sell on a stock split. It's okay to sell on a reverse stock split because that's not good. That means you about to lose a whole bunch of shares, okay? But listen, I just wanted to put that on us. I got to make sure we're in the know about everything that's happening in the stock market. So know what a stock split is. Next up, guys, we have our word of the day, and our word of the day is beat. Guys, in the stock market, you're going to hear earnings beat, the word beat, and all that means is that every single quarter, your favorite companies have to come up and talk their talk. They got to let us know what they've been doing and what they haven't been doing. And a beat means that they beat the expected cost that the analysts put on this stock. So for instance, Amazon blew it out the park yesterday. Apple blew it out the park yesterday. They thought because the corona hit back in March that this company wasn't going to sell, wasn't going to have no money coming in, wasn't going to be doing anything. And they proved just the opposite. So therefore, when their earnings call came, which was yesterday, they beat the expectation. A beat is always good. The opposite, which I'll teach you guys next time, is a miss. Okay, if your company's missing earnings, if they're not getting in the ballpark of where they're supposed to be at, meaning sales, meaning services, then that's a miss. But we're going to talk more about that next time. A beat means your company has been killing it. And so as you see today, if you're investing in some of the companies I talk about, they are up tremendously. This is how you grow your wealth in the stock market, guys. Invest in companies that's going to do good. Amazon crushed it. Apple sold all kind of iPhones. They sold all kind of Macs. They crushed it. Okay, Facebook, they didn't care about all those companies trying to boycott. They crushed it. They know they're the best company to advertise on. No company does better than Facebook. That's why you got to hold Facebook. Okay, and so they all beat by a landslide. They show why they're the best in the business. That's why it's important that you guys follow good companies and good CEOs. I can't tell you guys who runs Hertz, but I can tell you who runs Facebook. I can tell you who runs Amazon. I can tell you who runs Tesla. Those are the dope guys that you need to be following and investing your money in. You might as well team up with winners because that's how you consistently win. So listen, guys, next up we have our question of the day, and today's questions come from Robert Z. He said, I really like your channel. I subscribe. You seem to keep things real without all the hype. Very enjoyable. I just finished paying all my bills. I can't wait to get some of these trades. Rob, man, I thank you in advance, man, for sending this comment and leaving this below, man, because listen, I want to highlight the main thing that you said. I appreciate the love, but you said something that I need all of my subscribers to pay attention to. I just finished paying all my bills. Guys, the number one thing that you need to be doing on your investment journey is making sure that your house is in order. paying your bills, paying off debt. That's really what I started this for, guys. I started investing. I've been doing it for 10 years, but I started teaching it in January because I'm looking like, man, I'm debt free. I've been debt free since 2018. And because I'm debt free, I can do a whole bunch of stuff. And when you don't have bills to pay, guess what you can do? You can buy more stocks. You can invest more into your investment portfolios, your 401ks and things like that. Guys, work to pay off your debt. If you got credit card debt, get that paid off. If you've got a car note, get that paid off. If you know me, man, I buy everything. I own everything. Ownerships matters to me. My houses, my cars, everything. So guys, if you want to get on the right track to build real wealth, you have to embrace ownership. You can't be on people. It's better to be the lender than the borrower. So guys, make sure that you are taking care of first things first. Paying off debt, paying off student loan debt, paying off leases, rent, all that kind of stuff, man, so that you can focus more on your investments, and you will see really quickly how easy it is to grow your portfolio from 0 to 100K as well. Hey, I hope that was helpful, guys. If you have comments, make sure you let me know. Leave them below and I'll add them to my next video. Listen, man, I make videos like this every week, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you grab some free stock using my link below, and I'll see you guys in the next one.